Our next panel is all about building trust, mitigating risk, and looking at the modern-day framework for strategic governance, which is now a strategic tool that's shaping decision-making and protecting stakeholders and determining how our organizations respond under pressure. Heading to this stage is Patrycja Oselkowska, Partner, Financial Services Leader, and Middle East Growth Leader at Deloitte Middle East, and David Berman, Partner and Head of EMEA Financial Services at Covington and Burling. Moderating this session, please welcome Stephen White, Senior Conference Manager at Forbes Middle East.
Good afternoon. Thank you for joining me. On my left, I have Patrycja from Deloitte, and on my far left here, I have David here from Covington. So we're going to be looking at the role of governance. We're going to be examining the pivotal role of robust governance frameworks and proactive compliance in shaping effective corporate strategies and discussing how integrating governance into strategic decision-making fosters sustainable growth, risk management, and stakeholder confidence. I promise the discussion livens up from here. So, Patrycja, I think we've all seen the changes in the way that this is done, and I'm just wondering sort of how can the sort of advanced analytics that we're seeing, the AI shift in terms of governance from reactive compliance to proactive data-driven decision-making, financial services, and other regulated industry. How is this changing and reshaping the industry?
Very good question, and good afternoon. Analytics, AI, are tools and techniques that help any organization, whether it's in a banking world or another industry, to really make sense out of the vast amount of data. And in this specific context, it helps you to apply compliance in a proactive way.
Yeah.
So anticipate something might happen and do something about it before it happens. But I would argue by doing so, it's not really only about compliance. You actually are helping to improve your customer experience in a very positive way.
In what way, Patrycja?
Well, think about an example from a banking industry, fraud.
Yeah.
Right? You, as a customer, expect the bank to protect you from fraud.
Yeah.
And back in the days, when you were traveling abroad, you may remember the days you had to call the bank and tell them you are traveling for your card to even work.
Yes, indeed.
Yeah?
Yeah.
And then the banks thought, okay, we put a checkbox in the app so that it will be better for the customer. But that's still very reactive, right?
Yeah.
If you want to be in that proactive sense of the world, you really need to anticipate, look for patterns, look for scenarios, and identify when a transaction is correct versus when do you need to stop it and perhaps do further checks. So this is what we see from the pure technology perspective. But if I may add one important thing, technology without the right culture is not sufficient.
What do you actually mean by culture?
In this sense, it's a culture that really embraces data in the decision-making process. You know this abbreviation HIPPO?
Yeah. Highest
paid person opinion? In many corporates, the most senior person in the room makes a decision. But in the reality, is that really the best way to make a decision? Or is there...
in their opinion, it probably is, isn't it? But it's often the case in this market. This is what happens.
It's often the case, right? The most senior person in the room makes a decision. But is that person equipped with the knowledge, with the data and the insights coming from that data to really make that decision?
One of the kind of the questions I think is that we were discussing this behind in the green room, is that for me I see the challenge being that a lot of the generation of business leaders that we have at that level that are involved in that decision making, a lot of this technology came after they started their career journey, so it's something they may not fully understand.
it's possible.
The benefits, if you know what I mean.
Yes, but I think we all see the benefits of AI in perhaps outside of a corporate world, right? Whether we know it or not, we use AI in a daily life. So why wouldn't you apply the same tools and techniques
100%.
in decision-making process?
100%. I mean, David, let's get some nuts and bolts as well. I mean, from your perspective, how does strong governance directly influence capital allocation, risk management, and obviously investor confidence?
Well, good afternoon, everybody. That's an easy one. I mean, to my mind, strong and coherent governance frameworks are absolutely essential in managing risk appropriately and also instilling confidence in relevant stakeholders. And by stakeholders, that will include regulators and investors. Essential in ensuring that decisions are being taken at the right levels, in accordance with the agreed risk appetite, on a properly informed basis, and with objective and robust challenge to ensure that all stakeholder interests are appropriately being taken into account.
That's interesting, but obviously, sometimes decision-making can slow the process. And obviously, in a fast-moving market, how does governance keep pace?
Well, it can do if you're not careful, but if you've got a carefully calibrated, well-thought-through governance framework, it would, and certainly some of the best, most sophisticated frameworks that we've worked on and that we've advised on, they will legislate for time-critical urgent situations that warrant, for example, expedited processes, etc. To envisage that, because the last thing you want is being dragged back or held back from pursuing a commercial opportunity because governance dictates that you need to have a full quorum or whatever it is. So I think you need to be building that type of eventuality into your governance framework.
Interesting. I mean, Patrycja, I guess one of the things that, again, we talk about newer technologies, when I think of things like blockchain and RegTech that we've seen emerge over the last decade or so. I mean, they all promise greater transparency and traceability. But are you seeing real practical impacts today? I mean, are these strengthening the governance frameworks that we need? Or are people just dabbling in a bit of experimentation in terms of what this technology can do?
Well, I would be stronger in my response, and I would say they do not only promise, they actually do deliver stronger governance. Let's start with blockchain. Blockchain provides access to transparent and irrefutable data source. Irrefutable. That means you cannot change it, you cannot alter it. It gives you, as an investor, the confidence that you can rely on this information. And we see practical applications of blockchain for a decade.
It's interesting because I don't think people obviously appreciate there are practical. It's one of those phrases people hear they don't really understand.
I mean, I work in financial services industry, so blockchain is used for more than a decade in supply chain. Connecting the participants in the network, the banks providing financing, the shipping company, the logistic companies, the buyers, the sellers, enhancing that transparency, but also making the process much more efficient, digital, removing paper, and like I said, really based on trust in information that is being shared. But then if I move into the other technology you mentioned, the RegTech. What is RegTech? RegTech is basically another name for technology that enables companies to automate their compliance, enhance their monitoring techniques, reduce human error, and most importantly, enable real-time decision-making. Real-time, not after something has happened, but as it is about to happen. Is it something we should allow? Should we stop it? Or should we send it to human follow-up to ensure this is correct? So, to conclude, if you are an investor and you're thinking about a company, right, you look at how efficient that company is. But if you are an investor looking for long-term, sustainable value, you want a company that is not only efficient, but also reliable, trustworthy, and fully auditable. And those are the types of technologies that enable exactly that.
Interesting. I mean, obviously, this is a market that has a lot of big family-owned businesses. And I just wonder, is there much appetite or understanding of this technology that you're talking about in terms of giving this overall governance in terms of what their compliancy and also, obviously, getting that transparency that potentially they could be getting? Obviously, it's such a thorny, kind of complicated issue, isn't it?
I mean, Deloitte has a specific offering targeting privately held enterprises. We call it Deloitte Private. I mean, what's the key difference here, right? It's not that those companies don't have governance framework. Of course they do. The big difference is the family dynamic, the succession planning, who gets along with whom and who doesn't. That is really the...
There's some laughs in the audience here.
So that is really the important factor in making those strategic decisions. Where do we invest, for example, in that new technology?
Yeah, it's such an interesting issue. I mean, David, have you got a comment on this? Some war stories that you've seen?
Well, yeah, I thought it would be worthwhile just sharing some war stories, certainly based on some of our experience in the financial services sector.
Please share. Please.
What does a bad governance framework look like, for example? What are some typical components of a bad governance framework? Well, this is not an exhaustive list, by the way, but I've just made a note of them here. Many of these cases have culminated in heavy regulatory sanctions. So governance deficiencies might have included, for example, incoherence across various elements of the governance framework. That's a common factor. Unclear or even non-existent accountability, both at a collective level and individual level. Inadequate or even non-existent escalation protocols, significant decision-making taking place outside of the appropriate governance forum.
By the way, these aren't war stories, these are horror stories.
They are, but they're all real.
Yeah.
And, you know, they're recurring themes: poor quality minuting and record keeping, a lack of objectivity and demonstrable challenge. Now, you can flip all of those on your head, on their heads to say, well, actually, what does a good governance framework look like? And whilst there's no single prescribed right answer, typically the better governance frameworks will have clear collective and individual accountability with clear and coherent terms of reference and role descriptions, a cogent escalation framework, robust protocols for the identification and management of conflicts of interest, which is an important one. Consistently informative minutes, reporting and information packs, and inherent independent challenge mechanisms as and where appropriate. The importance of a clear, cogent and coherent governance framework cannot be overstated. And I can't emphasize that enough. You know, we've seen way too many examples where the governance framework within an organization was poor, was weak, was flawed, was incoherent. And it has led to many issues, whether that's from investor concerns, we're not sure we want to invest in this company, through to regulators, through to employees, etc.
I mean,
if I may add, because I agree, but what I mentioned earlier about data-driven decision-making, I would also say, as part of that governance framework, you need good data to make those decisions.
You absolutely do. I mean, that's an absolute given. If you put rubbish in, you get rubbish out. So forgive.
We try to avoid that at Forbes, by the way.
Sorry, that was an English adage, but it's true. You know, and if you are expecting decisions to be made on a properly well-informed basis, and you're expecting those decisions to be good decisions, then they need to be made on a properly well-informed basis, pursuant to accurate data.
But that's assuming you're getting the right data.
Yes.
Good data. I mean, how do people get that data in the first place? Obviously, we've talked about some of the technologies. How do you wade through that?
Well, I mentioned some technologies that help you to make sure the data is correct, such as blockchain. You need to make sure you have a right process all the way from data capture through to how to use this data and who can access this data. You need all that governance framework that extends to the application of data in the organization. Only then you can ensure it's not only any data, it's actually good data. It's hopefully not rubbish in, it's good data in, and therefore good decision out.
Do you get, so good data in, good data out?
Good decision out. Good decision out. Yeah.
Thank you for the clarification.
As a general rule, I mean, just an anecdote. A common recurring theme that we hear from directors, board directors, and executives, you know, we're just not getting the right type of information, right? So it's not fit for purpose. It's too detailed. It's too granular. It's not clear. It's ambiguous. Whatever.
Yeah.
To which my refrain tends to be, well, it's incumbent on you to do something about that. Okay, if you're not comfortable that you're getting the right type of data in the right format, speak up.
Yeah, but I mean, maybe this is such a difficult question, but what's the single, if you had to give one single change to make in terms of this process to change, to avoid the sorts of situations you two are both talking about, what would you recommend?
Gosh, I mean, I would, I'm slightly cheating
You charge
here.
by the hour, by the way, David.
Sorry?
You charge by the hour as well, David.
I would say the culture point that Patrycja made earlier is a really fundamental one.
Yeah.
If you've not got the right mindset, if you've not got any real designs on putting in place a comprehensive cogent governance framework, forget it, because decisions aren't going to be made well enough. So I think for me, the key word is coherence. We've reviewed many governance frameworks over the years, and the single biggest critique of all of them is a lack of coherence.
Yeah.
Does it sit together? Does it work together?
And culture that culture concept you're talking about, can that help deliver that coherence that David is talking about?
It can, because you can have two approaches. You can have an approach when you think about the governance, the compliance as a tick box exercise. Tick, tick, tick.
Yeah.
Job well done, right? We are happy, let's go home. Or you can have a culture where you truly embrace the governance framework, the compliance, in order to give you long-lasting, sustainable advantage.
It sounds like ongoing as well. It sounds like
it's an ongoing process.
It's not a process done once a year or quarterly.
That's why I'm referring to the culture, because culture is not something that is fleeting in one point in time. It's something that stays within the organization for a long time. So if you create that culture where we embrace governance, then you really see that long-lasting value, sustainable value created for the investors, and long-lasting trust with all of your stakeholders.
You've got 1 minute, David.
Yeah, just to your point, Stephen, you know, I think, let's take investors as an example, and investors considering investing in some money into an asset manager. One of the key areas of due diligence focus is going to be around governance. What sort of governance has this outfit got, right? Do they make their decisions on a properly informed basis? Do they manage their risk in a cogent manner with the right framework around it, etc.? Those are absolutely key elements. It's not a one-off exercise. It's an ongoing exercise, and the best firms, in my view, will review their governance frameworks on a regular basis to make sure that they're doing what they should be doing.
And I guess the compliance rules change as well, so that must complicate things as
well. So they need to be adaptable.
Yeah, but if you have that culture, I assume that's something that you're ready for.
The only constant is the change.
Yeah, perfect. And we're right on time there. So thank you, panel. I hope if there's anybody that has any questions for our panelists today, do seek them out, because you're still here this afternoon. So thank you for your time, and thank you, everybody. Thank you.
Thank you.